So we're looking at the concept of cash management. So far we've seen what cash means, cash inflows mean and outflows are. Next we are going to see cash management a bit more in detail, understand a definition and what are the implications of proper cash management. That is why you need to properly manage cash. So first of all, like we have already discussed, management means optimum utilization of a resource. If it is time management, you make best use of your time. If it is financial management, you make best use of your finances. So if it is cash management, it is about making optimum best use of your cash. And when I say optimum use, I'm saying you neither waste your cash, neither do you hoard your cash too much. Correct? That means you should neither have very little cash, nor should you have way too much cash kept in the business. Okay? See, we know cash is the most important resource. Although it appears like at the very end, somewhere in the bottom of your balance sheet in the current assets, it still is the most important asset or resource that any business can have. Alright? That is, I'm talking of both cash that you have in hand and the amount that you have in the form of your bank balances. Both extremely important. Because a business on a day-to-day basis has so many expenses to meet. Not everybody gives you credit time or credit period. Like for example, if you're paying bills, electricity or water, you cannot ask the government to give you another 1 month or 2 months or 3 months to pay those bills, right? If you delay, you are going to pay fines on them. So not all expenses can be met on credit. They have to be paid in cash, they have to be immediately paid or they have to be settled, right? So it is very, very important for us to manage this cash in the best way possible. Okay? And maintaining an optimum, this concept, this word is very important. Maintaining an optimum cash balance at all times becomes very important. So a financial manager's job here, or in case of even small businesses, the person who's handling cash or the accountant, they have to make sure that the cash is maintained in such a way that there is a balance between two things. Now, two important concepts: profitability and liquidity. Very important concepts. So, maintaining cash is all about maintaining a good balance between these two things: profitability, liquidity. Now, what is profitability? How you manage the cash in such a way that you earn more returns on it, right? You should be able to get enough return on that asset, return on your cash. It should not just lie idle in your business so that you don't earn any interest and any return on it, correct? At the same time, you should also have or also be concerned about liquidity. That means it should not be such that you don't have any cash at all, correct? And that you're not able to pay any expenses or make any payments. So liquidity and having enough cash is also extremely important. Okay, so the whole idea of optimum cash balance is that you should neither have cash in excess, that means too much cash, neither should be a shortage. Okay, no surplus situation, excess means also surplus of cash. Okay, or no shortage situation. Cash should also not be inadequate, that is, you have expenses but you don't have money to pay those expenses. That should not happen. Fine. So what happens If you have too much cash or excess or surplus of cash, let's handle this first situation. Okay, if there is too much cash or surplus, I mean, a lot of us might think, how can that be a problem? What is the problem with having too much money, too much cash in the business? Okay, uh, it may seem like a very favorable situation to have a lot of cash lying around in your bank account, even when you don't need all of it to make payments to all your different expenses or payments for all your expenses, right? Understand that even excessive cash, surplus cash can be a problem. Why? First of all, the cash remains idle. Okay, we're discussing problems with too much cash. Okay, the cash remains idle, which means it is just lying around either in your locker at the business at your office, or it is lying around in the bank account. Big balance is there, but it is idle. Idle in the sense it is not making any return, like especially currency which you have lying around in your office, in your lockers, that will not give you any return. Unfortunately, if demonetization happens, even that is going to go. Yeah, even that will be taken away from you. So that money doesn't yield you any return. And even if you have it in the bank accounts, right, at the most, yes, you will get some interest on it, but how much interest do current accounts really give, right? It's very low, it's very little, isn't it? So keeping that cash idle without investing it in better investments and better revenues, okay, where you can earn a much higher rate of return, is not a favorable situation. It is not ideal to leave the cash lying around or bank balances lying around without make or investing them in places where they will earn a higher return. Okay, so if you keep cash idle, then profitability gets affected. You don't make any extra money out of that cash. You don't earn any interest from that cash. You don't earn any returns from that cash. So what happens is profitability gets affected. Fine. So one aspect. Secondly, what happens if you have too little cash? You have a shortage. You require a certain amount, let's say every month you need at least 1 lakh rupees to pay off all expenses, salaries, rent, taxes, your bills, and everything comes to, let's say, 1 lakh rupees. I'm talking about a small business, of course. So you have shortage. You don't even have 1 lakh rupees, you have much less than that. Say you have very little cash or inadequate cash in the business, okay, which is not sufficient to meet your day-to-day expenses. So in that case, what happens? Your working capital is reduced. Your requirement of working capital is not met because you don't have enough cash. So you can't buy raw materials, you can't pay for expenses, you can't pay salaries, nothing. Okay? And in such situations, we say liquidity gets affected. By liquidity means the availability of liquid cash. Alright? So that will be affected and we will not have enough cash to meet our day-to-day expenses. Is this clear? So two things we need to balance. Okay? Maintaining cash or managing cash is all about maintaining a good balance between these two things. Profitability on one hand, liquidity on one hand. If you have too much cash, then what is required? Then that excessive cash or that surplus cash will remain idle in the business and you will not be able to earn any returns or profits on them, right? So profitability is hampered or affected. Same way, if you have very little cash, less than the requirement, the usual requirement, then your working capital needs are affected. You don't have enough money to pay expenses, to buy things, to pay for any other type of expenses. Okay? In such cases, liquidity gets affected. which means there is no liquid cash available in order to make the payments. Fine. So a very simple concept we have in a case of cash management, and if you put all of this in a definition, okay, if we try to define cash management in the most simplest of manners, we can say that cash management is the efficient, small simple definition, is the efficient collection, disbursement. Everything that we've learned so far, we're going to put it in the form of this definition. And investment of cash in an organization while maintaining the company's liquidity. Very simple concept, very simple definition. Liquidity. Okay. So this cash management definition, we can break it down, understand it one by one. First is, it talks of three things. It says that cash management means to efficiently collect, disburse and invest cash. What is collection of cash? The inflow. It all depends on how you bring in the cash into the business. For example, if you have a lot of debtors, a lot of customers who have still not paid you, it all depends on you, what strategies you use to efficiently get back your cash, the collection of cash. Okay, so you have to use the best strategies possible to make sure that your debtors pay you in time. So efficient collection. Second is disbursement. Disbursement is ways in which you give out cash, outflow, right? If this is inflow, this is outflow. So what is disbursement? Depends on how you pay the cash, how fast you pay or how much you delay in making cash payments, alright, how, again you make sure that you don't have to give away excessive cash in the form of expenses, alright. So the way in which you disburse the cash, you give away the cash is called disbursement, right. So cash management also involves managing outflows, and finally it involves investment of the cash. Instead of letting your cash be idle and keep it lying around, you invest it. You invest it in the best possible avenues. You put it in good schemes, good shares, and all possible type of investment options that you have, and you make a good profit out of it. So here you are taking care of profitability. Fine. Okay, and finally all of this is done simultaneously by also maintaining the company's liquidity. Liquidity again is very important, meaning you are taking care of sufficient cash. You're making sure that you have sufficient cash in the business even after doing all these other things. You collect your cash in time, you disburse your cash in such a way that you don't lose out too much cash. You invest your cash in a way that you make good profit, but also the same time keep in mind that you need to maintain liquidity. You have to have sufficient cash balance in your business. So that is all that it means. Okay, so this is the whole definition of cash management, sort of encompasses, it summarizes everything that we're going to learn so far in this unit.